Okay, testing live stream. I think we're good. Let's go live on TikTok. Okay, cool. Here we are. Good stuff. All right. So, what city should we start with? Right here in Zillow, we have Austin, Texas, as what we're looking at. In fact, my calculator's actually set up for Missouri. Um, this is actually pretty interesting because we were looking at Joplin, Missouri, in a rent versus buy case, and this was actually pretty interesting. This housing market is definitely one that I think is doable for first-time homebuyers in a lot of ways. Um, because housing prices are manageable to a degree, especially if, say, you're making around $55,000 a year in Joplin, Missouri, and instead of saying that you've got 9,500, let's say you've been a little bit more diligent of a saver. Let's say you've been saving that income for maybe 7 years at 5% of it. So, for 7 years. So that's about $19,400 that you have saved up. Let's say that you're getting 0 down payment assistance and 2% in closing costs. That's currently a function of the purchase price that we have in the model at the moment. And let's say we're looking for maybe a $210,000 house. If we're looking at a $210,000 property, then, and we're also going to assume it's a 6.5% interest rate. Honestly, 6.55, because that's what the new 30-year fixed rate averages, which is, it's pretty brutal. It's not a good spot to be. So 6.5, or just over 6.5% on our interest rate. And let's say that we are looking at a property in Missouri. We're probably looking at a $210,000 property in Missouri. In fact, let's look at this one right here. Here, I'll bring this up a little bit closer. So we're looking at this property, this house right here in Missouri. It's a 3-bedroom, 2-bath, 1,400 square feet. Seems to be a decent house for the most part. Yeah, I mean, it probably could use a couple of quick updates. It was probably remodeled, I'd say, within the last 10 to 15 years. Could work as a starter home. So if we're going to spend $210,000 on a property in Missouri, and let's say that our budget is 30% of our gross income, or $1,385 a month, even this point would actually probably be a little bit too expensive. Probably wouldn't work for somebody making 55 grand a year. So they can either try and find a little bit more money in the form of a down payment, or probably just have to find a cheaper house to live in and find a lower purchase price. And that's why when I did this analysis, actually, a couple of days ago, it's probably around $190,000, which would make them affordable. So here, for example, this is a 3-bedroom, 2-bath, $177,000 house. So if we plug that purchase price in, and we take a look at that, $177,000, then we're probably looking at about $1,276 a month as a total payment, regarding principal, interest, tax, insurance, that kind of stuff. And that would probably put us within our budget if it's 30% of our gross income of $1,385 a month. We're going to access this tracker. Links in my bio, actually, for the Excel file. Why the hell would you agree to 6.5%? Why the hell would you agree it's a 6.5% interest rate? Make the seller pay for the buy down. Well, we're going to assume that the seller's not paying for anything. I mean, why would the seller be forced to pay for an interest rate buy down? I mean, if I'm a seller for a house and a buyer demanded that, I'd be like, all right, go kick rocks. Go find another house, because I'm not selling my house to you under those terms. Trying to buy in the New York City area and it's anxiety. Well, where are you located? Because that's a pretty big area, and the New York City housing market can be pretty nuts. It can be very intense. Bitcoin, what's going on? And a lot of people who try and buy in New York usually end up somewhere on Long Island. This is a housing market stream. This is where we do renting versus buying, look at different housing markets across the United States. And we also kind of examine what it takes to afford certain houses based upon purchase prices of house, today's interest rates, all that kind of stuff. So we have an Excel file down here, model down here where we can analyze all the data, and then just looking at any specific housing market. Right now we're in Joplin, Missouri, because that's where I made a video on it last, or that's when my last rent versus buy video was on Joplin, Missouri. It was a pretty interesting scenario. And it turns out that homeownership's more financially advantageous in this place. However, anybody's welcome to provide any sort of housing market that they want me to or want to talk about, whether it's where you live or whether you're thinking about moving somewhere. And someone had mentioned New York City, but the thing is that that's a pretty big place. So it's kind of tough to determine what part of New York City they're referring to. So, yeah, this is doable. Fortunately, for people looking to buy in Joplin, Missouri, it's possible. Can you plan a Washington D.C., Northern Virginia area one day? Well, Nora, yeah, we can absolutely go there. So if we zoom way out and head over to Washington D.C. / Northern Virginia, like if we're in Fairfax County or Washington D.C., we can look at potential deals, but what helps, though, or what makes this an effective conversation is that you can provide me with a household income and a down payment number if you want, and where you live, and we can also put in like FICO scores, what your current rent is, all these types of things to try and determine like what could work for a first-time home buyer or somebody looking to purchase here. Like, for example, if you're in Fairfax County, Virginia, you need to be extremely well off to be able to afford a house. For example, here's a let's look at this property right here. This is a $1.2 million 4-bedroom, 3-bath, 1,500 square foot house that definitely needs some updates. This is $1.2 million for this. Wow, that's insane. Yeah, and if you live in Nova, you buy townhomes, not houses. I believe that. I'm doing a master's in real assets financing at Georgetown, so I just want to learn more about it. Well, I mean, if you're going to be going to school in Georgetown and you're trying to determine if you think about financing and housing and possibly commercial, if you talk about that, commercial deals are okay. I mean, I do underwrite rental properties occasionally on my live streams. But tonight we're just going to do this. Housing market's going to crash. I think you're mistaken, my friend. It's not. The housing market's not going to crash. I know a lot of people are hoping it will, but it's probably not looking that way. So for a $1.2 million house in Northern Virginia, we definitely need to change our assumptions. Let's just say, yeah, so let's put in a $1.2 million purchase price. And let's say that you're going to put, I don't know, 10% down, so we'll put $120,000 right there. And let's say you're going to finance the purchase of this house on a 30-year mortgage at a 6.55% interest rate. And these homeowners insurance and tax numbers are definitely way off. Probably looking at something like this, I would say, for tax and insurance per month. About $8,216 a month. Now, if we want that mortgage to be no more than 30% of our gross income, it's $27,000 a month. That means we need to make about $330,000 a year to afford this house. If we're going to put $120,000 down, and if it's a 6.55% interest rate, this is a tough one. So you essentially need to be a multimillionaire in order to afford a house that hasn't been updated since 1981 in Arlington, Virginia. Andrew, thanks for doing this. Absolutely, Andy, and thanks for joining. Appreciate you hanging out. Or we get 100 people to give us $10,000 each. Yeah, that's yeah. Yeah, you can try that. Let us know how it goes. Do you think it's realistic the housing market crashes this year? No, Riley, I don't. I don't think it's realistic. There's a lot of people have been sounding the alarm bells on like foreclosure and you know how hard all that's been and foreclosures being up and that kind of stuff. It's not it's hardly a blip on the radar. How much can I afford? Well, we can determine that by the first thing I need is need to know a state that you live in. I need to know a household income that you want to give me and how much cash you have to put down for a house. Do you think a lot of homes are overpriced? Are priced over market value? Yeah, yeah. It there absolutely are homes out there that are way overpriced. I know there are homes that are overpriced, like in San Francisco, for example, and people are buying them. You know, engineers at like Anthropic and OpenAI are offering their equity in the company to homeowners. Like that's a thing now. If you don't mind me asking, what exactly are we doing, Tom? We're just looking at housing markets across the country, and we're kind of testing numbers to see like what it would take for us to afford a house in a certain area in any part of the country by looking at all the variables that we have here in this Excel model. Um, so there's all kinds of things that we can test. All right, Reek here says Alabama's salary is 95,000, and we've got 45,000 in cash. Okay. I'm gonna take a guess and say that sounds like the Huntsville area. So I'm gonna go to Huntsville. But you correct me if I'm wrong, of course, if that's not true. So if we're in Huntsville, Alabama, like this area right here, Montgomery. Okay. Here's Montgomery. So if we're in Montgomery, Alabama, and we're making what 95,000 a year with 45,000 in cash, and let's say the FICO score 750. If our budget to buy a house in Montgomery is, if we want to keep the mortgage at 30% of our gross income or less, that's probably a $366,000 house. So if we test a $366,000 purchase price, if it's a 6.5%, oops, yeah, that's too high. I need to readjust that. If it's a 6.55% interest rate, it's probably about $2,514 a month. So 366 is probably too much. We probably need to make this like 350,000. And at that point, we're at $2,400 per month as an estimated mortgage on a $350,000 house in Huntsville. And finding a $350,000 property in a decent part of town that's a turnkey house, I'd say is doable in Montgomery for sure. Like, what's this right here? Here's so here's a split level for $275,000. It's 4.3, 2,500 square feet. Looks like it was flipped recently, and you got to bring your own range and refrigerator, it looks like, but could be good. Could work. Nice master primary bathroom. So, yeah, I'd say, Reek, you're in a really good spot. Problem is you won't get that much in rent there. Threger, are we talking about from a landlord's perspective or a renter's perspective? Because that's an important distinction to make. Using CoStar? No, this is Zillow. CoStar, we're not looking at commercial deals. Unknown says Hudson Valley, $380K, 150,000 down. Okay, Hudson Valley, New York. All right. I think this is the right spot. Kind of near Kingston. And we have $150,000 to put down. Nice. 150,000 down, and we're in New York. So let me switch states here. And a $380K purchase price, I'm assuming. That's what we're looking at instead of a household income. So if we look at 380,000, if you're going to finance that house or that purchase with where interest rates are today, you're probably looking at around a $2,100 a month mortgage. Oh, 380K salary. Oh, wow. Okay, household income. Well, in that case, if it's 150 down and we're making 380 a year, and we're willing to spend, let's say, $9,500 a month, it's probably it's over $1 million. I'd say. I'd say you're comfortable with a $1 million price. Riley says, "Would you say we're in a time of slight stagflation?" Yes, I would. Is Realtor good to see houses? You mean Realtor.com or an actual realtor themselves, like an actual person trying to sell you a house? Because the answer to both those questions is yes. I would say those are safe bets. Now, I'm in Kingston, New York, and Hudson Valley. It took me here when I put in Hudson Valley on Zillow. So I don't know if this is like an exact right area, but this purchase price, these home prices seem to line up with what somebody was looking for. Like for $569,000, you can get a 3.2 that's 2,000 square feet. Dang, that's expensive. It's a nice house though. Looks like it was well done on the inside. Are housing prices decreasing? Yes, Matthew, but in some markets they are, but in some they're going up. Can we suggest locations? If so, can we view Houston home, thinking of moving there? Yeah, we can look at Houston. The thing that will help with this is a household income and a down payment you want me to use, and we can kind of find out how much house you could afford in Houston, Texas. So if I go to Houston, Texas, and just kind of remove the boundaries so we put in everything, there's definitely a lot of options, especially if we're working with $200,000 a year, $230,000 a year, and $200,000 down. Did you make the spreadsheet yourself? I did, Matthew. Yeah. So in Houston with 230 grand. Oh, let me flip to Texas here because that definitely makes a difference. Property tax and insurance escrow are a big thing. All right, so 230K, 750 on the FICO, 200 grand down. Now, if our budget for our mortgage each month is, let's say, $5,750 a month, that's 30% of that gross income. That's around $928,000. I think this might be a little bit off just because of how tax and insurance rates are in Houston. Look at North Houston, specifically Heights. Houston Heights, this area. We could probably make it work. Like this is a 700. Wow, that's actually really expensive. It's a $798,000 2.2. That's 1,750 square feet. This house looks like it was probably built in the 1920s. All right, well, let's test this out. So it's a $798,000 purchase price. We're going to put 200 grand down, and let's say we're just going to use a 6.5% interest rate on our mortgage, just for shits and giggles here. And we're looking at roughly $1,800 a month in tax and insurance escrow, probably around $5,600 a month. So the good news is that this would fall within our budget. Just under 800 grand could work. I wouldn't recommend going much higher than that though. And I mean, this is Houston Heights. It's a nice area. Like if 995,000, like this is a really nice home, but it's probably not going to work. Because like if we just we just do the math here, 995,000, you're probably over budget. Yeah, we're looking at 7,100 a month, and our budget's 5,750. So call it around 820. I'd say is probably your cap. Can we do San Mateo 250 with 200,000 down? Sure. Do you loan shop for competitive rates before or after being under contract? Before, Nicholas. Before. 100% before. All right, off to the Bay Area, San Mateo. San Mateo, California. Yeah, expensive area. This is probably a rent situation, to be honest. Even with $250,000 a year. And I mean, we're going to get a break on taxes and insurance because it's California. But I mean, if we're at $6,250 a month as our budget, it's probably on just under $1 million as our max suggested purchase price. And just looking here at San Mateo, I mean, geez, man. Yeah, 1.75 million. That's a 3.2. Not even 1,400 square feet. That's probably not going to work. Yeah, so you can this is probably a condo. Like for example, here's a $920,000 condo. Let's see what the $815 a month for HOA fees. Oh my God. All right. Well, 920K for this. Let's just and then $815 a month in HOA fees. We're at 6,267. This is probably it. This is probably like what you would be looking for. Damn. That's wild. Second home, Lake House income's 242 down payment, 200K, Lake Martin, Alabama. Nobody. It depends on what your current mortgage is, what your DTI is. $815 a month for an HOA on a 2-bedroom, 2-bath condo in San Mateo. My God, that's nuts. That is just nuts, bro. Andrew, what area in the U.S. would you say is the most bang for your buck near a major / large U.S. city? Indianapolis, you can get pretty good bang for your buck. Cincinnati is not bad. Columbus, Ohio is starting to get expensive. There's parts of St. Louis that you can make work for sure. Kansas City isn't horrible. It's mostly the South and Midwest, I would say. Mostly the South and Midwest. It's not. There are places and there are exceptions to every market, but yeah, it's tough. Ocala, Florida is actually another one that just came to mind that could work. Grand Rapids sucks because it's the fastest growing city in Michigan right now. Yeah, Grand Rapids is tough. Absolutely, Rayu. Happy to help. Do a house in Manitoba. I can't. My Canadian calculator's broken, guys. So for those of you who are asking about Canadian homes, I will get that fixed and we'll do it another day. I just don't have it. Pittsburgh works too. Pittsburgh, Pennsylvania is another good one. Bryson says Kentucky, 165K income with 150 down. What would a 425? 145,000. Sure. Okay. So 165, 150 down, and we're in Kentucky. Bryson, I think I've done your like situation like 3 or 4 times now. I'm happy to do them every time, even if they're repeats. But I know we've like looked at yours a bunch of times. And you're in Louisville, right, Bryson? In the Louisville area. Regardless, if our budget is at 30% of our gross income, we'll call it $4,100 a month. That's pretty healthy for Kentucky. So, like for example, looking here on the east end of Louisville, and in fact, I think just because I recall Bryson's situation, I might have looked in this exact same neighborhood before. Like here's a 4.3, 3,600 square feet for $485,000. Now, if we throw all 150,000 at this place, and it's a 6.55% interest rate because mortgage rates have gotten worse since the beginning of the year, and obviously we're not paying $815 a month for an HOA fee, nor are we paying that much for homeowners insurance. We're probably at around $2,800 a month. That would be well within your means. This $485,000 house. This is a nice one. Yeah, you could probably make this work just fine. It's a lit. I mean, the wallpaper probably has to go in the dining room there. I mean, that's fixable. Kitchen works. Got a little homework nook for the 8th grader or whatever, or your kids. Nice brick mantle, floating shelves. Yeah, I mean, it looks like decent finishes. A little outdated, but it's fine. Do you do Canadian? I do have a Canadian calculator, but it's broken at the moment. So for now, it's just homes in the U.S. Do Seattle? It's a goddamn jungle out there, $1 million plus. $1 million? Just $1 million in Seattle? I would have expected you to say something like 2 or 2.5. Rates stay changing. No kidding. In fact, we're just because I'm going to look this up. We are going to look up the average, and we'll show this to you guys. So the average 30-year fixed rate mortgage in the United States at the moment is currently, what is that at? So yeah, 6.55%. Ugh. Not fun, bro. That's not fun. Not a fan of that at all. Foreclosure rates are skyrocketing. Here's the thing, though, with foreclosures, like I know a lot of people are saying, oh, man, the housing market's about to crash. Foreclosures are up through the roof. You got to look at foreclosures in historical context, especially compared to 2008. And foreclosures take forever. It's foreclosure sales that you want to pay attention to and short sales that you want to pay attention to. Less than 1% of all housing is currently defined as distressed properties, meaning it's a foreclosure or a short sale. When are interest rates coming down? Your guess is as good as mine, Vanessa. Some of the smartest people in the world get paid a ridiculous amount of money to try and determine where interest rates are going. And oftentimes they're wrong. This is a tough one. Thinking of getting into real estate. I have good income and good credit recommendations. Junior, it depends. What do you mean by getting into real estate? You trying to become a realtor? You trying to buy a house? An investor? Like, depends on what you're talking about. And Philadelphia is an interesting market. It can be challenging, but it's doable. Do Corpus Christi, $500,000. Drake, is that a purchase price in Corpus Christi? Or is that household income that you want me to use? Junior, if you're looking to get into real estate investing, what you can do is if you go to the link in my bio, I help people who try to get into real estate investing because I'm a real estate investor myself. And you can book a free 15-minute call with me. Yeah, there's 10 houses worth $500,000 in Corpus Christi. I'd imagine they're all right here. Actually, this is insane. My guess, okay, so this is, what's the name? Okay, we're basically near South Padre, or not quite South Padre Island. But this is Padre Island. Padre Island here in Texas. I bet half of these homes, this is an insane amount of houses for sale in such a small area. Half of these houses are probably Airbnbs. People trying to get out of Airbnbs here in Padre Island, Texas. That's insane. Why would you invest in real estate over equities? The reason why, Vlad, is because real estate, you can use a lot more leverage to acquire assets as opposed to buying stocks. And that's because, it's within banks' underwriting guidelines to give you a whole bunch of access to a whole bunch of debt in order to acquire an asset. So, and levered rates of return typically are higher than unlevered rates of return. We're so fortunate when we bought in 2020. We'll die here in our little Seattle house at 2.3%. Daunting, you're one of the winning ones, though. You're definitely one of the winning ones. I mean, a 2.3% interest rate, that's quite literally a once-in-a-lifetime interest rate. Do you have anything that shows what you think a house is worth? Maybe coffee chat. Are you talking like an Excel model, Bryson? Like this? To like kind of come up with what a fair value for a house is? Or just like a tool, or what are you referring to? Thoughts on the San Diego market? Looking to move there with $150K down for a down payment, low DTI. Belial, depends on your household income and what part of town you want to live in. It's expensive. No, not San Diego, Texas. Obviously, it's one of the most desirable areas in the country to live. And if you want to live in a decent part of San Diego, like the Sierra Mesa area, for example, I mean, you're looking at housing prices that are easily over $1 million. My interest rate's currently 3.5%. We'll have to move soon. Why though, Vanessa? Because that's an extremely good interest rate in today's market. Why do you have to move? Because getting rid of it's a very costly choice in a lot of ways. Yeah, something along those lines. Tool or insight based off home info. It's a good thought, Bryson, actually. Like kind of incorporate, because I know you guys can't see this entire Excel file, but like having something to where you can see like what we think the house is worth, like put another box in here somewhere. Maybe I can get rid of this graph because this isn't doing much. Of basically like input, square footage, bedrooms, bathrooms, when it was built, estimated age of latest renovation or something like that. And then basically like a counter offer calculator Ooh. Counter offer calculator. Maybe I should do that. St. Charles, Missouri. Sure. Do you have a household income and a down payment that you want me to use for the St. Charles area? Like, what kind of household income are we working with? Or do we... In fact, let me adjust this right here. So that way we're in Missouri. What do you think about getting into new home construction as a business in Texas? Houston Metro. Kevin, I used to work for a company that did real estate development, and it was commercial real estate development, but we were very active in Houston. What's really interesting about home construction in Houston is that your zoning laws are like practically non-existent. You can basically build whatever you want, wherever you want in Houston. The thing is, though, is that there's a lot of inventory being built there. So a lot of competition. $100K household income for St. Charles, Missouri. Okay. And let's say that it's like $50,000 that we can use for a down payment. Now, kind of looking around St. Charles. Well, first we need to find out how much house we can afford. If our budget's $2,500 a month, and that's 30% of our gross income, it's probably somewhere around like $350 to $360. And if we test a $350,000 purchase price, I'm just playing it safe. This is actually probably the limit right here, because we're looking at about an estimated $2,500 a month mortgage, nearly that. And if we want that mortgage to be less than 30% of our gross income, that's $8,300 a month, $99,800 a year that we need to make. Luckily, though, that's doable in St. Charles. For example, what's this? Here's a $355,000 2-bedroom, 2-bath, 1,400 square feet. I know that third bedroom really does make a difference for some people. Seems all right. For $300,000 right here, you can get 3 bedrooms. There's only one picture, though. Yeah, that's a little bit of a concern. What are zoning laws, LOJK? I bet there are people in Houston who honestly wonder what that is. What state? We're looking at Missouri right now. This is St. Charles, Missouri. We're looking at their housing market on Zillow. Orlando. Jabadell, yeah, Orlando's a tough one. Damn. La Crosse, Wisconsin. Wisconsin's actually like pretty expensive. Property taxes and insurance are starting to get expensive in La Crosse. But yeah, we'll go check out La Crosse. Braden, I know you said $90K a year, but what's a down payment you have saved up for a house? My house is $380,000, down to $365, 6.5% interest, property tax are crazy, $3,293 a month. That sounds about right for Orlando, Jaden. Damn, that's kind of wild. All right, Braden says $15,000. Good news, we got $90,000 to work with. $15,000 actually should be okay. For like, you can make that work all right for La Crosse, I think. So $15,000, we got $90,000 a year as a household income, and then let me switch it to Wisconsin here. Okay, so as far as how much house we can afford, if it's 30% of our gross income that we're trying to keep that mortgage at, that's $2,250 a month. It's probably a $300,000 property. That's doable in La Crosse. I'd say that's doable. And in fact, we can probably go lower than that and build in a little bit of breathing room. Now, Braden, I'm not sure like if this is a decent part of town that I'm in. Like, for example, this is a $260,000 house right here. Probably built in the early 50s, it looks like. Very nicely renovated, though. Dang, that's a cool kitchen. I actually really love that color palette. Looks like subway tile backsplash. Massive spice cabinet. Okay, it looks like a mostly finished basement and with a full bathroom down there. All right, for 260. So 260,000 is our purchase price here. Is that income pre-tax? Yeah, it is. Around $2,000 a month, a little over $2,000 a month is our estimated mortgage on this place. Hell yeah, La Crosse has just moved. Well, there you go, man. There you go. I mean, you can probably go a little bit higher too if you wanted, because your budget, at least the way I have it set up, is $2,250 a month. That's 30% of your gross income. You're probably okay. Like, you can probably find a spot to live, no problem, in La Crosse. What website is this? This is Zillow. I would love to know how much house we could afford in Lakewood Ranch, Florida, 200K income. Vanessa, that's a great question. What's a down payment that you want me to use for Lakewood Ranch in Florida? Oh, interesting. Okay, I thought this was, for some reason, I thought this was on the north end of Orlando, or the east end of Orlando, but we're actually outside Sarasota. Okay. Probably around 150,000 with 200K to put down for a house in Lakewood Ranch. Okay. So the thing that we need to be careful of, that you really got to do your due diligence on when it comes to Florida, is I know that we're pretty far inland. There's probably not flooding zones around here. There could be, though. There could very easily be flooding zones in here. And if we're at 200K a year, let me adjust this, with $150,000 to put down, and we want to keep the total mortgage at 30% of our gross income or less, that's $5,000 a month. The data is showing around a $780,000 max suggested purchase price. I'd say it's wiser to bake in a bit of breathing room and maybe keep it at $725 or less. Good news is that that's probably doable. That's probably doable, as long as we stay north of State Route 70 here. So, for example, here's $735. Here's a $735,000 4-bedroom, 2-bath, 2,200 square foot house. Awesome renovations. You got a pool, hot tub. That's sick. Nice. All right, $735. Let's test this bad boy out. $735,000 at a 6.5% interest rate. I'm thinking that's a little low. This is definitely low. Probably around $4,600 a month, $4,680 a month. We probably need to bring home around $187 a year to be able to afford it. Oh, and HOA fees. Actually, that's a good point. I didn't check for HOA fees. $361 a month in HOA fees for this place. Did I scroll past it? Yeah. All right. No, that was a good call. I missed that. $361 a month in HOA fees. Now we're probably just over $5K a month. We need to be at $200K a year. So I would say, Vanessa, this is probably it. I'd honestly, I'd keep the price a little bit lower, but I mean, this is a sweet house. 4.2, like with a pool, hot tub, all that, like all the bells and whistles. Could be a nice place, and you're probably not paying too insane of an annual or monthly premium for homeowners insurance. So that's the good news. Housing Utah, bro. Look at that. Skylar, I go look, and for anybody who's like, go look at this market, go look at that, just go scroll through my page. I have a series on my TikTok called, our Gen Z and Millennials Cooked when it comes to homeownership. I've done like 170 or 160 something episodes of it. Utah, in general, Utah's cooked. Utah's insane. Oof, we need to start backing money in gold and silver, even human organs. Looks identical to one of my house price-wise, money down payment. My payment's $5,200. Are you in this part of Florida, Dakota? Because we're in Southwest Florida right now, like outside Sarasota, Bradenton, Lakewood Ranch. I'm in Texas. Oh, got it. Okay. Probably close, though. 30% of income, right? Yeah, 30% of gross household income is what we're using this model on, or what we're using for this, I should say. Sorry. Will you scroll down and show the monthly period of gross household? JH, do you mean this right here? So this is our estimated, it's a here, let me go back to the deal that we were looking at. It was this house right here. It's a $735,000 house. So this house right here. And the estimated mortgage on it, if we're putting $150K down and we're going to use a 6.5% interest rate or 6.55, it's just over $5K a month. And we probably need to make around $16,800 a month gross to afford it. That's about $200K a year. So Southwest Florida sweet spot is North Fort Myers. Stargy, the problem is you're going to get eaten alive by homeowners insurance there. It's ridiculously expensive in that part of, like, Fort Myers. Oh, man. Should I buy a rental in Compton? No. No, you should not. And I'm not being facetious when I say that. I would not. I would never buy rental real estate in California. The red tape and the legal issues that you could end up in if you have a bad tenant is a total nightmare. What does PITI mean? PITI means principal, interest, tax, insurance. So that's your total monthly payment as a part of your mortgage. What are your comps? What comps? We're not looking. I mean, we're not looking at particular. I mean, I'm just testing what the estimated mortgage would be on this house. We're not looking at comps. We can, though, if you want to. What does maintenance include? So maintenance that I have right here, I use something called the 1% rule. What that essentially means is you take 1% of the home's value, so that's $7,350 each year, and you divide that number by 12 as your estimated monthly maintenance. So in the case of this house, it's probably a roughly $600 a month. That's probably even really aggressive for a maintenance estimate because this house does look new. But that includes stuff like, oh, the fridge finally died. You know, we got to buy a new fridge. Or that last storm that rolled through town, you know, the hailstones were the size of softballs and took out a bunch of shingles on the roof. Or, you know, a window broke or something like this. Do you know much about North and West Fort Worth? I've looked at the area before, Ryan. Pest control. Yeah, that's also another one. Can you look at non-HOAs in the area? Maybe. Where are you getting the potential rent numbers from? Potential rent. This? You mean this number right here? Because we're not looking at renting a property out. We're looking to buy a house to live in it. And then SZ asked about Denver. Yeah, let's go look at Denver, Colorado. How much would you need? Oh, you joined late. No worries, Ahmed. No worries. How much do you have to make to afford a $750,000 house in Denver? Okay. Same area, regardless of location. All right, well, let me remove this with $150,000 down. So we'll go look. How about Lakewood? Lakewood, Colorado. I know it's not technically Denver. Close enough, though. So let me adjust this to Colorado. And we have $150,000 to put down as a down payment on a house and a $750,000 home in Lakewood, which is findable easily. You'd probably need to be making around $200K a year. Never mind. No, not that much. Call it 192, excuse me. So right here, here's a $715,000 house in Lakewood. Hang on, I'm going to move it just a little bit. So here's a $715,000 property. It's a 5-bedroom, 3-bath, 3,000 square foot house. I'm actually looking in Lakewood. Well, there you go, man. There you go. I don't know if you need this much house, but this is a good spot to be. What's an HOA? I don't know how to pronounce that in Arabic, but an HOA stands for Homeowners Association. It's it's basically where a group of homeowners in a neighborhood get together and set up a system of rules that homeowners have to abide by to protect the value of their houses. Yeah, absolutely, CZ. Happy to help. You killed that man stream. 200K, you went silent. Listen, no one said the truth was a pretty thing, right? Got a fun one for you when you want to change areas. 1079 Camino Coronado in Ron Park, California. Oh, man. Okay. This is going to be an expensive house. Ron Park's a nice area. Oh, okay. This is a flip. Never mind. Let me... Oh, man. This place needs work, bro. Oh, I virtually staged it. Okay. And by the way, I know you guys haven't seen the listing. $500,000 they want for this. $500,000. And like, look, like, oh my God. My thoughts on this state of the housing market. Is this a censored chat? This is a safe space, Cybertron. You can say whatever you'd like about America's housing market. Yep, roof foundation all inside his house is rotted. Oh my God. No, Vanessa, the $500,000 for a house in this area it makes sense. For a flip in this area in California is actually not insane. Not bad for $500,000, right? Do you think mortgage rates drop in the next 2 to 3 years? I got a single family house at 3.99. Feels like it can never sell. Next 2 to 3 years, maybe. I'd say it's more likely no than yes, though. If you want to tell you the truth. Sorry, that's gross income, right? Yes, it is gross income. Rates aren't 5%. No, they're not. They're not. That's why I have it plugged in as 6.55 right here. Why is the housing market so bad? Yo, I'm not 5% regarded. I don't think anyone called you that, but the housing market is rough. I'm not going to, I'll empathize with you on that. Can I afford a $700,000 house if I make $80K a year with $250 down? Anhio, what state? What part of the country do you want me to test? I'm going to tell you probably not. Probably not, but we can try. 6 months ago, you told me I should buy a house. Your numbers made sense. Closed on my home in May. Thanks for the advice. Shai, congratulations. That's awesome. I'm so, honestly, that. I'm so glad you decided to stop in the stream. And we tested your numbers and tested your case a little bit, and you actually closed on your house. That's awesome. I'm really glad I could provide a second set of eyes for your situation. That's super cool. It's likely we're going to see rate and housing collapse around 2030. Mortality cliff is coming. I don't. The housing market is not. Here's the thing. At least, I'd say for the next 24 months, the housing market is not going to. We're not going to see another 2008 anytime soon, to be honest, in my view. Okay, since my friend, SoCal. Okay, Anhio's in SoCal. I have his numbers plugged in. Yeah, Anhio, for SoCal, Southern California, if you're, well, okay, let's, if you want to keep the mortgage on that place at $2,000 a month or less, it's probably around $500,000. Let me switch states here, actually. In California, yeah, I mean, you're around $500,000. A $750,000 house is putting you at somewhere around a $3,800 a month mortgage. You need to be at $150 a year with 250 down to afford a 750K house with today's rates. So unfortunately, no, I don't think it's going to happen. You realize boomers have kids they'll just give their estates to? Yeah. I mean, that's probably what's going to end up happening in a lot of cases. So for those boomers who are homeowners, their kids are probably in a decent spot. Those who are not, it's an issue. Didn't we hit highest foreclosures in a quarter in like the last 20 years? No. Foreclosure, the foreclosure news you saw was foreclosures went up by 20. They increased 21% since last year, but it's not. Foreclosures right now are almost a non-factor on the current state of the housing market. That it's not indicative of an imminent crash or anything like that at all. I've been told to wait for the crash for years, and now I'm 40 and never owned a home. Well, Brittany, I mean, that's the average age of a first-time home buyer now. Now I make a good salary, but the level of hope you gave me the price just seems like a ripoff. Yeah, in a lot of cases, that's true. All right, let's put some new numbers in here. Can I afford a house in Long Island, New York? This is Sean, by the way. Sean says, "Can I afford a house in Long Island, New York? $600,000 house. $600,000. Okay, let's do that. $600,000. Okay, is our purchase price for a place in Long Island? We're putting $250,000 down. Okay, 150K a year in household income. We got $10,500 in annual property taxes for a place in Long Island. So let me go to Long Island here. Okay, so this Suffolk or Nassau County. I mean, they're interchangeable in a lot of ways. You're going to be paying high property taxes, that's for sure. Now, a $600,000 house in Long Island with a 6.55% interest rate, we're probably looking at around $3,250 a month with more than half down. Nearly half down. Center Reach, New York, Suffolk County. Okay. So Center Reach, here we are. So we're looking at a $600,000 property. Let's actually see if we can find your house or the one you want. Is it this one? Is this one you were looking at, Sean? I think this might be it. 6.55% interest rate. Is that realistic? Benny boy, that's what the average 30-year fixed rate mortgage is. No, it shows up for $580. Okay. Well, good call for $600 because that'll put it, the numbers look a little bit worse, but that's good to plan for, hope for the best, but plan for the worst. This is probably doable, actually. My property tax assumption is a little bit low. That's probably more like it. It's around $3,000. Call it $3,400 a month, Sean. I think you can make it happen for even at $600K. So $587. I think you're good. I have to pay $20K over to get in a house in this area. Yeah. This is like New York, the Long Island area, New Jersey. This is the New York City metro area in general. This is like one of the. It's just still a hot housing market. 250 to put down. That's what the number. That's not. This is a number that I was given. I didn't come up with this. This was data provided to me by someone in the chat. Man, I really realized how cooked we are. Yeah. How many houses do I own? Maddie, I own my own house, and then I have 3 rental properties. I have no debt. I just have car insurance. This is like $1,000 total. Well, there you go, Sean. Being debt free definitely helps. You can make it happen. I hope your commute isn't too bad into the city, though, because I hear the LIE can just be insane. I'm thinking of getting a $250,000 house with 90K income, 3.5% down FHA. Any tips for Albany area? Well, let's go look. Let's go up to Albany here. And we're working Long Island, 10-minute ride. There you go. So Flappy Bingus from Long Island, New York here. Let me look at their numbers again because we need to make sure we've got everything right. A $250,000 house. Okay. And it's an FHA deal. Okay, so it's going to be 3.5% of our purchase price right there. That's $8,750. We can probably look at maybe a little bit lower of an interest rate, like maybe around 6.25 with an FHA deal. Probably around $2,000 a month would be my estimate on the mortgage on that place. Oh wait, no. Wait, that's sorry. Just thinking of a VA loan where you're PMI free. An FHA loan, you're essentially still paying a guarantee fee. Flappy Bingus, you could probably make it happen. A $250,000 house in Albany is also doable. You can find one for that. Not specifically Albany, any of the surrounding areas. Yeah, I mean, we can go up here to like Cohos. Yeah, like I'd say it's doable. Like, what's this? This is a $225,000 4.2. And that place actually looks like it's a rental property or was a rental property. Here's this for $255,000. It's a new listing. It's a duplex. You could house hack this if you wanted to. Or looks like it was a duplex that might have gotten reconverted. It's possible. Yeah, I think it's doable. Can you tell me if we'll be tight on money, though? I will have to furnish the house, and we'll have $70,000 left in the bank. Well, it depends on, I mean, are you buying designer furniture, Sean, or are we, like, watching TV on a blow-up couch or sleeping on an air mattress? I mean, how many bedrooms are we furnishing, this kind of stuff? Like, if it shouldn't be more than, if it's just you living there or maybe, like, your girlfriend or wife or something, I don't know, like, regular furniture, yeah, call it $10,000 to furnish the place. But I don't know what you already have. And you live alone? Yeah, man. Like, $10,000 max to furnish it, I would say. Do you always recommend putting the most amount down? What's your philosophy? AJ, that's a great question. It depends. It really does depend. And the reason why it depends is because of we have to examine the opportunity cost that we'd be paying of where we could put our money, of where else we could potentially put our money. So, for example, if you have, let me switch states here because New York's a strange one. They've got really, really high tax. Let's go to Missouri, right? Let's just go to Missouri, and let's say we're looking at a $500,000 house. Now, many would say, okay, we'll put 20% down. That way you avoid PMI. So $100,000 down on a $500,000 house. Let's just say it's a 6.5% interest rate. You're probably looking at about a $3,300 a month mortgage. Now, what I'm going to do right here, I'm going to kind of expand this. I need to get this out of the way so that way you guys can see what I'm about to do here. Now, a $3,268 a month mortgage is pretty good. Let's just say that's decent. But instead of putting 20% down, let's test another scenario where we're only putting, 5% down. So that, that would be $25,000 down as opposed to $100,000 down. Now our estimated mortgage is $3,813 per month. So if we put that right here and take the difference between those two, you're spending $545 a month more. That's $6,500 a month more per year if you go 5% down instead of 20% down. Now, we also needed to get the difference between the amount that we're putting towards the deal. That's a $75,000 difference of 5 and 20% on a $500,000 house. PMI would be higher due to 95% LTV, probably, but just for the sake of simplicity, Matt, we're just a demonstration. So, if we take the $6,500 difference and we divide that by the $75,000, that's roughly call it 8.72%. So what you're doing by putting more money down on a house is, or putting, more money down on your house, you're getting about an 8.72% rate of return by being a more aggressive, by having a more aggressive down payment. Get used furniture. Alex has a good point, Sean. You should get used furniture. How much would you recommend putting down on a VA loan if nothing's required? 0, if you can, because then your return on equity in the property is quite literally unlimited. That's like a VA loan on a home. Like buying a house with a VA loan is mathematically one of the best investments that you could ever possibly make. And that's because your return on equity can potentially be unlimited. Because you're borrowing, you're using 100% leverage. Yeah, AJ, I appreciate you asking. And not enough people do this stuff. And not enough people do this analysis to determine, I'm just going to I'm going to put 18% down. Or like, let's put 22% down. We'll avoid PMI. It'll be great. Okay. Like, yeah. But how much extra cash flow are you dedicating towards the house that could be put to work otherwise? Because if you're confident that you can earn higher than an 8.72% rate of return, then you should probably not go for more down. You should go for less, but you also need to be wary of the fact that you have to be able to afford a higher mortgage. So the question is, how savvy of an investor do you think that you are? Because that's kind of the theory behind all that. What about clearing out stocks to buy the house outright with no mortgage? Bad idea, I'd say. Have you made a video on what you showed AJ? Because I only caught the last bit. Hayden, yeah. I will make a video on it. Actually, I'll make a video and put it on my TikTok channel. So that way people can kind of get the understanding of, should I put 5%? Should I put, like, it really can be an actual difference of, like, should I put 7.8% down or should I put 14.6% down? You know, because that can make a difference. Why should I not sell all my stocks to buy a house outright without a mortgage? Because, well, first, capital gains. Your capital gains taxes can probably impact that. Depending on when you bought those stocks, you'd probably be paying long-term capital gains tax. The other thing is that your house will probably not appreciate in value as much as stocks will. And the reason why real estate can be such an effective investment is because people will use debt, aka other people's money, to acquire it instead of their own. That's what makes real estate a powerful investment, not putting all of your own money towards a house. Houses increase in value at, let's say, 3.5% per year. Your ETFs and your index funds, that'll do 9%. So if you're a shit trader, then it would be worth it. Exactly. That's right, Alex. Yeah. So if you go into Wall Street Bets on Reddit and you trade options that expire the same day, or, buy stock in GameStop or, AMC or, whatever. Or, you bought stock in SpaceX when it IPO'd last month and you got burned pretty bad by it. Then yeah. Wendy's stock. That's right. That's right. Sir, this is a Wendy's. Sir, this is Wendy's. What are you doing here for life-changing financial questions? My son pays $38.95 in rent in San Diego, looking to buy $1 million. How much would you put down? At least, oh man, it depends on what his income is. If his income is, call it like 150K, and we'll go back to San Diego's here. Let me pull it back up on the map. If he's making less than 150,000, it needs to be more than 200 grand, I'd say. combining our incomes. Well, what is it? Jersey Mike's IPO. That could be an interesting one. Got rinsed on the SNTD IPO. Got lesson learned. There you go. Jersey Mike's could be an interesting IPO. That's coming in a couple days, actually. $380,000 is the combined income. They pay $3,895 per month in rent in San Diego. They're probably have $200K liquid. All right, so let's do this. So this is actually an interesting one, everyone, so pay attention to this, because this is actually something. This is a rent versus buy analysis. This calculator can say, should I rent or should I buy? $3,895 a month for rent in San Diego. Person A and person B have $380K a year as combined household income with $200,000 liquid cash to buy a house. And they want to look at $1 million house in San Diego. I think that's what they said, right? Okay, $1 million. Let's use prevailing interest rates at 6.55%. Let me make sure I'm in the right state. Okay. So this will be interesting. So Dachshund, I think that you said it's your son. Yeah, son, and we'll call it son's fiance or son's wife, girlfriend, whatever. So the first thing that I'm going to assume in this is 5% annual increases in rent. I'm also going to assume 2.5% and 3% annual increases in tax and insurance, respectively. And let's go find a $1 million property in San Diego that they might want to buy. Here we go, right here, $1.05 million. Oh man, no, never mind. Don't want the trap house. How about this? Here we go, 32,000 square feet for your son and his girlfriend. Not many pictures, but that's fine. We'll say it's $1 million for this place, just for the sake of the argument. All right. Now, I'm thinking their estimated mortgage or their estimated monthly payment, probably around $6,000 a month. So they'd be going from a $38.95 per month in rent to over $6,000, to just over $6,000. Trap house for $1 million is crazy. Yeah. Property tax in San Diego stays flat. Okay, good to know. Good to know. So we'll put that at 0. We'll say that's 0. All right, so $1 million house, they're going from $38.95 in rent to just over about $6,000 a month. Now, let's say they bought that $1 million house in San Diego and they lived there for a 5-year period, 60 months, and it went up in value at 3.5%. The value of their equity in that property after that 5-year period would be about $440,000, just under. That's about a 17% annualized rate of return. That's pretty dang good. It's not bad. Now, we compare renting and buying to each other directly. Over that same period of time, it's over a 5-year period, it's about $93,000 more expensive to be a homeowner, factoring in those rent increases as well. Now, if they decided to remain renters and they took all $200K that they have, put it into an index fund, plus invested, let's say, the difference between renting and buying each month for the next 5 years, that's $2,100 a month. That's a lot of money going into a portfolio. And it earned about a 9.5%. It's due 3 years. Okay, my bad. Sorry. Okay. $38.95 for rent in San Diego seems like a steal. Probably is. Now, over a 3-year period, instead of $93,000, it's about $65,000 more expensive. But if they invest the difference between renting and buying, plus put that $200K into an index fund, so basically, I'm going to put $200,000 in the stock market, plus I'm going to invest $2,110 a month in the stock market for the next 36 months. If they make a 9.5% rate of return each year, it's about $380,000 worth of assets that they would have in a portfolio. It's a little bit better than what their home equity would be worth. So the question is, how disciplined of investors are they? Because if they're not going to put $2,100 a month into the market, let's say it's only $1,250 a month, then they'd be pretty close to what the home equity would be worth after 36 months. Are you assuming rents to continue to increase each year, Bizzo? Yeah, 5% annually over that 36-month period. The calculator automatically adjusts. The data automatically adjusts. So whether it's 5 years, 36 months, those 5% annual increases are so very disciplined. Well, if they're very disciplined, remember the difference between renting and buying is $2,100 a month. Let's call very disciplined $1,800 a month. Then at that point, they're probably like $30K off better from a net worth perspective as renters. And and renting's probably the better choice for now, I would say. Try to do this in Florida. You can make it work in Florida, Popcorn Jay. It just depends on where. He's been there 2 years and no increases for the next year. Well, if his rent's not going up and they like where they live, then, maybe, where was that trap house I found in San Diego? It was somewhere around here. Damn, I lost it. Regardless, they don't have to live in a trap house in San Diego, and they can still rent. Loves his home in Claremont. There you go. Claremont was the trap house. There. Yeah, I'm in there, right? I'm in that neighborhood. Yeah, here's one. Anyway, that's a rent versus buy analysis, guys. That's kind of giving you an idea of what what you should do. Should you rent or should you buy? Making 76 grand a year, moving to Destin, Florida at the end of August. Any advice? Rent. Rent a house in Destin. Don't buy a house there. Can we make that a TikTok? Can you make that a TikTok, please? Yes, Dashand, I can. I can make that a TikTok. And B. Chamblia, it's not to say that Destin isn't a good place to be a homeowner. If you decide to be a renter as opposed to a homeowner in Destin, you're probably saving yourself a lot of headaches from an insurance perspective. I would not buy a house in Destin if I were moving there. Would you buy a house in Tampa now or rent? Depends on the deal. It's a deal-by-deal basis for the most part, guys. Is this the right time to buy a home for a first-time home buyer? Sonny Bunny, unfortunately, interest rates are higher, or the highest they've been since last year. So it's not looking great. It's not looking great. New grad, so is really the only option. Yeah, I mean, hurricanes, like Popcorn Jay's right. Hurricanes are a problem in Florida, and Destin is, right in the front line of that. So you're going to have like hurricane premium, flood zones all over the place, all that stuff. Will the market crash? Jalix, no, I don't think it will. The housing market, no. I pay $2,085 a month in rent. North Carolina, $380K target, $175K year income, $20,000 liquid rent versus buy. Yeah, we'll run that really quick. Can you even insure anything in Florida? Good question. Good question. All right, our golf hack friend here from North Carolina says $380,000 house. We got 20 grand to put down towards it. We are paying $2,085 a month in rent, and we have $175 a year. Oh, whoops, that's the annual income. And then let me adjust this. This needs to be $380. Okay. For NC Golf Hack, which by the way, I definitely need help on my golf game. I am horrible at the moment. What I do for these is for rent versus buy analysis, I assume a 5% increase in rent each year, and then 2.5% and 3% for tax and insurance. Now, a $380,000 house at a 6.55% interest rate in North Carolina, I'm estimating it's just about $2,832 a month. It's a pretty big change from $2,085 a month. But if it's a $380,000 house and you really like it, and let's say you buy it and live there for 60 months, so 5 years instead of 3. The house grows in value at, say, 3.5% each year. you'll build about 114 grand worth of equity in the place. That's really solid, 41.6% annualized rate of return. Now, the thing that we also need to look at is renting versus buying from a financial perspective. You're going to be paying about $28,500 more over a 5-year period. So call that just under $6,000 a year more as a homeowner compared to renting. Now, if you decide to remain a renter and you invest the difference each month, call it $747, $750 a month into the stock market, plus that 20 grand you have saved up, threw it all into an index fund, plus 748 each month for the next 60 months, you'd have about just over $100,000 worth of assets at a 9.5% rate of return. That's if you decide to remain a renter. You'd have $114K worth of home equity. So it's close. It's slightly more advantageous to be a homeowner. Now, if you decided to remain a renter, and let's say that you were investing, I don't know, $1,000 a month, then you're probably better off as a renter. So in your case, NC Golf Hack, you're probably better off as a homeowner in that case. Both the real estate and stock gains have ridiculous assumptions. What's ridiculous about this? Which croutons, which assumptions specifically? Why would you assume 3.5% appreciation? Because that's what most housing markets appreciate at. The average is just under 3.5%. So maybe it's a little bit high. And you're ignoring the potential for reinvesting equity. Reinvesting equity? What do you mean, Drip? And this isn't a ridiculous assumption at all, because this is the average annual rate of return of the S&P 500 for the last like 9 decades. So no, I don't see the ridiculous assumption here. And what are our golf? I can help you with your golf game, Broski. Send me a video of your swing. Yeah, dude. I played 9 holes a day. It was rough. It was very rough. All right, guys. I'm gonna call it a stream. I'm gonna call it a night here. Really appreciate everyone joining. Had a ton of fun talking with everybody. These real estate streams I'm gonna be doing. For the most part, things have kind of been focused on the stock market lately, and doing reviews of publicly traded companies. However, the real estate streams will continue, of course, as well. We'll be doing renting versus buying, all that kind of stuff. So, it's something that I should probably do more frequently. Maybe I'll do these at night. Do 2-a-day streams. I will be live tomorrow for those of you who missed me. And DMs are always open, so if you need help or anything like that, shoot me a DM. And if you need help, like there are people who I don't want to toot my own horn or anything. I mean, I'm like not that guy, but I've helped people buy houses from these live streams. So if you're like a first-time home buyer and you're like, dude, what do I do? Like, how do I know my realtor's not ripping me off? How do I know that this lender's not trying just to collect a commission check? Or like, is this house a trap house that I'm buying or whatever? Go to the link in my bio. The link in my bio, the very first link in my link tree, is like a free coffee chat you can book with me. And we could talk about your situation. Renting, buying, developing housing. I own land. I want to build on it. I want to be a real estate investor. Help me find my first deal. All that stuff. So, use me as a resource. I'm here to help. And also, if you want to mess around with this Excel model right here, that's in the link in my bio as well. So if you guys are curious about that stuff, and you want to run the numbers yourself, maybe I missed your request, which, by the way, if I did, I'm sorry. Go check it out. Go check it out. And also, don't forget to hit the follow button. I'm going to call it a night. Really appreciate everyone joining. All 52 of you who decided to hit follow this evening. Really appreciate you guys. I will be live tomorrow, and I will be live Thursday and Friday as well. So in the meantime, y'all have a great evening, and we'll talk soon. Have a good one.